All right, guys, here we go. In this video, we're going to show you a few different assets and show you a few key things to watch for in market price to determine before the market turns down or pulls back or crashes, how you can determine that before it even happens. And the first asset we're going to look at is Caterpillar, symbol CAT, looking at the weekly chart. And the first thing I want you to notice is as price ran up, you don't want it to get too far and away from the 20, okay? And that is in time and distance, okay? So before it pulled back and hit the 20, last time it touched it was in June of 20, and then we ran up, and then here we are, June of 2021, okay? So, as you should know, the longer an asset trades above the 20 on any timeline, 2 minute timeline, hourly timeline, monthly timeline, daily timeline, the higher the odds, higher probability is going to either trade sideways or pull back into the 20 and allow the 20 to catch up. And also, the further away it gets, the higher, above the 20, higher the odds, higher probability that it's going to, soon pull back into it. Now, there's a number of other keys in these patterns and setups, but that's for our Patreon members. I'm just kind of giving you a few of the ingredients of the total recipe here. And then also, at the top of a run, you can anticipate, a probable pullback or what have you by the consolidation zone. Now, as it goes up, there's two reasons for a consolidation zone, and one is accumulation and one is distribution. Accumulation is when the big money is accumulating, like potentially at a bottom of a pullback. And of course, at the top, what are they doing? Are they accumulating for another run higher, or are they distributing those shares to the retail people for an anticipation of a pullback? Yeah, they're selling off up here. And another trick they do, I'll just give you one here. There's a few of them, but after a big run, they'll put in a big green bullish engulfing candle. Retail normally really buys this hard, and that gives them another opportunity to sell off into that run in distribution sideways consolidation zone. And then guess what? Yeah, here you go. And even if you uh, didn't know all that and you saw where we had two little areas of sideways consolidation, and then actually it wasn't. They weren't consolidating to run it higher. They were consolidating to drop it. But anyway, as soon as you broke through that, that would have given you a hint further downside. Now, present day, here we are again, sideways consolidation, and we're a little far up and over the 20. So, pop quiz, do you think the big money is accumulating for another run higher, or do you think they're just distributing shares, selling off for anticipated drop to the downside? Okay. And then here we go on Apple. And as you can see, uh, we had a little downtrend line up here. There's many other caveats to this, but like I said, it's for our Patreon members. But anyway, going into the third hit, you'll pull back, and then we popped under, actually closed under Friday, this long-term trend line going back to 2020 and this low pivot. And then our next, as you come down, there's only three things that are going to save a price, an asset as it's pulling back. In other words, a safety net, a trampoline, in order to hit to bounce back up. There's only three, factors that are going to help you there, or going up into resistance. But anyway, let's talk about Apple on the way down. And there's only three things, like I was saying, not to be redundant, that's going to help it, but I want to drive this point home. Number one is a low pivot or a high pivot. All the thing a pivot is a 180, and that's pretty significant because the market has said, hey, we're done. We're going to rotate this thing, like turning a sports car in the street. It happens real quickly, and you're back up to the upside. Or they do it on the reverse. You come up, do a 180 pivot back to the downside. So those two things are one of the three that's going to, possibly help you on the way down to find support. Another one is a moving average, and then the next one is one of the fib lines. Now, one of those by itself is not really that great. You always want two or more factors, two or more reasons to take a position, take a trade, put on a position, et cetera, et cetera. Okay, just one is really not good enough. So as we come down, the only moving average we have under us, the 20 and the one, I mean, the 20, the 50, and 100 is up in this range, is the 200. And a lot of times you break a major support, price will be sucked down there like a magnet. And then as you can see, we have this low pivot here from October of 2020. And then we do have a fib line down here as well. And like the ropes on in a boxing ring, they will give. So this area is, kind of, it's a more of a range than exact target because you do have a low pivot, you do have a moving average, and you will have a fib line there. But, that's, for another topic. So, yeah, that's why we're anticipating price to come down into this range, as well as a couple other things. And then also, let's throw this up here. Okay, guess what? Yeah, FTX token. And this was full disclosure. This was done in our Patreon group back in November 12th, obviously after the big slam down. But um, yeah, well, me personally, were never in it. Whenever, some crypto well, anything, not to pick on FTX, but anything comes out and the only thing they have any substance they have with it is, sports stars, movie stars, celebrities. Man, that's always a big red flag to me. So I didn't even touch that junk. But anyway, as you see here, big run up. It's a specific moving average that our patrons know about this green one. I mean, the gray one. And then as you can see, time and distance above the 20. So we were due, or they were due to pull back into it. And guess what? Uptrend line, one, two, three hits. Normally on your fourth or fifth hit, you'll break it. So even if you didn't get out up here, no big deal. Could have gotten out in here. And we don't believe all the way in, all the way out. We scale in, scale out, just like the institutions do, okay? So anyway, even if in that gray box, if you took your specific percentage out, you would have been ahead of the crowd way before the big slam down. Okay, and then let's go to um, let's see the Dow Jones. Okay, let's go. Let's even use a monthly chart here. Okay, and let me take all this. This for our Patreon members. But anyway, even going back to the roaring 20s before the biggest crash in the history, before or after the 1929 crash, as you can see, we were in a parabolic move. If I didn't tell you this was the Dow Jones, you probably would have thought it was an altcoin, in a parabolic move. So anyway, again, time and distance above the 20. Once you get under the 20, you can't get over it. I mean, you're locked in. And then, again, time and distance under the 20 before we start, pulling out of there. And yeah, it took a while to get back up and over our previous all time high. But, there's several areas here to have, exploited the market and made, get back into the groove. But uh, main thing I want to show you here, this is why this is so important. And all joking and kidding aside, this is or could be if you knew what you're doing, have the patience, the right attitude and the self discipline to do it. This is all multi generational family wealth being made. And this is where the discipline to sell, the discipline, the motivation to do the right thing. This is multi generational wealth being lost if you did not have that self discipline to start scaling out when you knew you should have. And let's see here. There's the big, bank debacle here where we had to come in and save the banks. If it had been your small business or my small business, the government could care less. But, it was the banks, all the connections, political connections, that came in, saved it with your hard earned tax dollars. And then, boom, I guess we learned our lesson, here, because here we go, parabolic move, multi generational family, fortunes being made, a little bit off the top here. Then here we are now. I will give you a little bit here. My thesis is that um, we can't break this 50. Okay, we did here during the COVID slam down, only one monthly close under it, then boom, man, they got us back over it real quick. Same here, present day, pretty much. October, they got us back over. Here we are now, but we're still under the 20. Okay, and time and distance. The last time we really accumulated around that, after we got through the bank debacle and put in new regulations, and we learned our lesson. We really did. Okay, so here we are, back in 2011, riding it. Here we are here, 2016, hitting the 50. COVID slammed down here. So if we actually lose it like we did here in 2008, yeah, it's going to be a bad few months. Okay, and the only way, well, there's, I'll just go ahead and give you this. Uh, there's only way, let me pull this up here so we can see it. The positive note is that, we could come down. Yeah, come down, move up, come down. And as the 50's coming up, stick that 50 like an Olympic gymnast, do a pivot and pull our way up and out of here. Okay. But we got to take out that high pivot here in order, to continue to the upside. And then how we mess that up, if we come in, that's a W. If we come in and, come up, come down, make a lower high. In other words, don't take out that high pivot and then crash under this low pivot right there. Okay. So, all right, guys, appreciate you watching. Come follow us on Twitter. I'll get it. I'll think of it here in a second. Check us out on Patreon, and we will see you on the charts.